Have you ever stopped to think about those uh, invisible forces that are constantly shaping our daily lives? And maybe even, hitting your wallet.
Hmm.
We tend to gloss over just how much relies on commercial vehicles, trucks, vans, the whole lot. But right now, they're facing this huge financial crunch.
That's right.
So today, we're going to dig into something pretty specific. The massive jump in fleet insurance costs. We'll be looking at excerpts from Fleet Insurance, rising costs, and adaptive strategies to really understand what's going on.
And maybe we should quickly clarify what we mean by fleet operations. It's not just a couple of company cars. We're talking about, large groups of vehicles, trucks, vans, buses, sometimes owned by a business to move goods or people. Managing these fleets is complex, making sure everything's safe, efficient.
And the insurance part, the premiums.
Yeah, the insurance premiums. Those are the regular payments these companies make. It's their safety net, basically, to cover costs if there's an accident or damage or theft. It protects the vehicles, the drivers, the whole operation.
Okay, got it. So our mission today for this deep dive is pretty straightforward. We want to figure out why these premiums are suddenly skyrocketing. What are these fleet companies actually doing about it? And maybe most importantly, what does all this mean for you listening? How does it ripple outwards?
Yeah.
Our source material actually uses a great analogy. It says, think of a video game where every time your character gets hit, the cost to heal increases. That's what's happening with fleet insurance.
It really is a good way to put it because the price tag for protecting these absolutely essential vehicles, it's climbing for, well, a whole mix of reasons. It's not just one simple thing.
And it's not just about, the number of accidents happening, is it? I've read that when a crash does occur, especially with these newer trucks loaded with tech,
Oh, absolutely.
the repair bills can be astronomical. Things like advanced cameras, sensors. Fixing those isn't cheap. Is that figure right? That repair parts in the UK, say, jumped over 35% since 2020? That must hit insurers hard.
That figure is definitely in line with what we're seeing globally. It's not just how often accidents happen, but how severe, how complex the repairs are now. That's really pushing costs up.
Right.
That 35% increase you mentioned, it points to that bigger trend. Replacing these high-tech parts, recalibrating systems, it turns what might have been a minor bump into a really significant insurance payout.
Wow.
And then there's the legal side, too. We're seeing a big rise in, really expensive lawsuits. If an accident causes serious injury or major damage, the claims can be massive. We're talking potentially over $10 million sometimes.
$10 million.
Yeah, so insurers have to build that possibility into their pricing.
Okay, so beyond the accidents, the repairs, the lawsuits, there are other big forces too, right? Like climate change, more extreme weather.
Definitely. Things like major storms, wildfires. They used to be more, isolated events. Now they're happening more often, causing significant damage, and that risk gets factored into premiums too.
And unfortunately, you've also got things like theft and fraud, people stealing cargo, or even staging accidents.
Yes, that's a persistent issue. Dishonest claims mean that ultimately honest companies end up paying more to cover those losses across the system.
And you mentioned something else often overlooked, the driver shortage. How does that play in?
It's critical. Fewer experienced drivers means companies are hiring more new drivers. And while they get training, statistically, newer drivers tend to have more incidents initially.
Oh.
So that adds to the overall risk pool insurers are looking at. You bundle all these things together, pricey repairs, bigger lawsuits, weather, fraud, driver experience. And the source suggests insurers are raising premiums maybe 7-12% overall.
Okay.
But for physical damage cover, that could be jumping 20-25% just in 2025. It's pretty staggering.
Wow. Okay. So that paints a pretty clear picture of the why. Huge cost pressures. So the next big question is, what are companies actually doing about it? How are they fighting back against this financial wave? What strategies are working?
Well, one of the biggest shifts, and probably one of the most impactful, is really leaning into telematics.
Telematics. So like the black boxes in trucks, tracking data.
Exactly. Getting real-time data on how drivers are actually driving, speeding, harsh braking, sharp turns, things like that. Fleet managers aren't just guessing anymore. They're using this data.
To do what exactly?
To pinpoint risks and then act on them. Coaching drivers, maybe, who brake harshly too often. It's about continuous improvement, making safer driving measurable. And we see it, work fleets can often lower their premium in the first year just by addressing those specific behaviors.
So it's not just about spotting the bad drivers. It's about creating this constant feedback loop, helping everyone improve.
Precisely. It's a much more proactive approach.
That makes sense. And I guess that ties into the human element, too. more safety training.
Absolutely crucial. Companies are investing heavily in better, more intensive driver training, really focusing on defensive driving, how to anticipate and avoid potential accidents before they happen.
And is there a direct payoff? Fewer claims?
Oh, definitely. The link is very direct. Better training means fewer incidents mean fewer claims, and fewer claims mean eventually lower premiums. It's a clear connection.
Okay, and it's not just the drivers, right? The vehicles themselves.
Right, preventative maintenance is huge. Keeping vehicles in top shape, catching small problems early stops them from becoming major, expensive breakdowns or safety issues later on. That saves money and prevents claims.
Simple but effective.
And we're also seeing some smarter fleets making strategic choices about their vehicles, maybe using smaller vans or even electric vehicles for certain types of routes.
Ah, because they cost less to insure.
Typically, yes. Lower repair costs, sometimes perceived as lower risk, so it can be a tangible way to cut insurance expenses.
That's interesting, and I read about a new insurance model too, pay as you drive.
Yeah, that's gaining traction. Instead of just a fixed annual premium, your cost is tied more directly to how much you actually drive. Less mileage equals lower cost. It aligns the insurance expense much better with actual usage and risk exposure.
That seems logical. And beyond these strategies, the safety tech itself is getting pretty advanced.
It really is. The integration of AI-powered safety systems, things like automatic emergency braking, warnings if you drift out of your lane, adaptive cruise control, these aren't just fancy gadgets.
They actually prevent crashes.
They actively help avoid accidents. That directly reduces risk, which is exactly what insurers want to see. It leads to lower premiums over time.
Makes sense.
And sometimes it's simpler things too, like planning routes to avoid areas known for high accident rates or cargo theft. Just steering clear of known risks can make a difference.
Right.
Plus, companies are always, shopping around, negotiating with insurers, tweaking their policies to get the best balance of coverage and cost.
It sounds like a really comprehensive effort, attacking the problem from all angles. And it's not just what companies are doing themselves, is it? Regulations are changing too, especially looking ahead to 2025.
That's right. The whole regulatory environment is definitely tightening up. For instance, minimum insurance coverage levels are often increasing. Companies just have to carry more cover to protect against these bigger potential losses.
Okay.
And regulators are mandating more safety protocols too. Things like compulsory driver monitoring systems or mandatory dash cams in vehicles.
Dash cams seem almost standard now.
They provide so much accountability and crucial evidence if there's an incident. And beyond tech, there's a huge focus on record keeping. Fleets have to maintain incredibly detailed logs now.
On what kind of things?
Everything. Vehicle maintenance schedules, driver training records, qualifications, detailed incident reports. It's comprehensive. And the key part is, insurers look at this.
How closely you follow the rules affects your premium.
Significantly. Companies that can demonstrate strong compliance, a real commitment to safety through these records, they're much more likely to get better insurance rates. It pays to be compliant.
Okay, so we've covered the rising costs, the reasons why, the strategies companies are using. So if you're listening, you might be thinking, all right, interesting for the trucking industry, but what's this got to do with me?
Right.
But even if you're not driving a big rig or managing a fleet, these insurance costs, they definitely affect you, maybe in ways you don't immediately connect.
Yeah, the most direct way is probably through shipping costs. When it costs more for a company to insure its trucks and operate them safely.
Someone have to pay for that.
Exactly. Those higher operational costs tend to get passed along the supply chain, and eventually that can mean slightly higher prices for you at the checkout for groceries, electronics, pretty much anything that needs to be shipped.
Okay, so potentially higher prices, that's the downside. But is there any upside for the rest of us?
Surprisingly, yes. It's not all negative. This intense pressure on fleets to cut costs by reducing accidents, well, it actually encourages safer roads for everybody.
Ah, because they're trying harder than ever to avoid crashes.
Precisely. Their financial incentive aligns with public safety. Fewer truck accidents benefit everyone who shares the road.
That's a good point.
And there's another big positive ripple effect. These cost pressures are actually accelerating innovation in the industry.
How so?
Fleets are pushed much harder now to invest in things like greener vehicles, electric trucks, for example, partly because they can be cheaper to operate and sometimes insure.
Okay.
And they're adopting smarter technology faster, like those AI safety systems we talked about, advanced logistics planning, anything that makes operations safer, more efficient, and ultimately less risky from an insurance perspective.
So the challenge is actually driving progress.
Absolutely. It's a huge challenge, no doubt about it, but it's also acting as this powerful catalyst for positive change throughout logistics and trucking.
It really seems that way. The source material kind of sums it up, doesn't it? Saying that these rising premiums in 2025 are a massive hurdle, yes. But they're also pushing companies to be safer, smarter, and way more efficient. Investing in tech, training, maintenance. It helps manage risk, control costs, and keep goods moving reliably.
Yeah, it brings us back to that video game analogy, doesn't it? Fleets are basically having to seriously adjust their game strategy because the levels got harder.
Right.
They're finding ways to keep winning against these rising costs. It really shows how important it is not just to know about these things, but to understand them and figure out how to apply that knowledge to solve real problems.
Absolutely. So, okay, maybe we see slightly higher prices on some things.
Yeah.
But the flip side is this huge push for safer roads and some really incredible technology making its way to trucking,
Right.
which leads to maybe a final thought for you listening at home. Thinking about all this amazing safety tech being built into fleets now.
Yeah.
If it genuinely meant safer, more efficient deliveries, would you feel safer knowing your next package might be delivered by a self-driving truck? Something to think about.